All right, so this is a practical session. I believe on Monday we were able to do some justice. My other colleague did some justice to the theoretical part of the Fibonacci tool. And my job here this afternoon is to take you through some practical examples on how to use the Fibonacci tool professionally as a Forex trader. Now, Fibonacci tool has a lot of uses. If you go on YouTube, there are many uses, but then we're not going to go into all the uses. Just the simple way you can use it to achieve, fantastic trading results as a Forex trader, regardless of your level, either as a beginner, intermediate, or even an advanced trader. So to get started, where do we find the Fibonacci tool on our MetaTrader? Now, this platform you are seeing is a MetaTrader 4 platform. It's very user-friendly and it's good for beginner traders. So if I want to use the Fibonacci tool, the first thing I'll do is to come to the upper part here that I just circled. That is where we have the Fibonacci tool. That set of lines, dotted lines with F, at the base. It's called the Fibonacci tool. Now, I'll click on it. I'll just drag it and show you on the screen. This is what this tool looks like. Now you may wonder of what importance is this tool. It's quite important because, like I said, it can help us do a lot of things in trading. It can be used to identify take profit levels. It can be used to identify psychological levels. It can be used to identify retracement and reversal levels. And these are key things you need if you must be successful as a Forex trader. So the big question now is, how do we apply it onto our charts? How do we use it to determine, after we've determined direction of where the market is going, then how do we apply it to set maybe a take profit level or to know when there could be a retracement or reversal on the chart? Now, this is how we do that. If by virtue of your analysis, I'll show you some examples of some past data, and I'll also show you an example of some analysis I did this morning that has gone in line, as price gone in line in that analysis, and the Fibonacci level showing where price is on those particular instruments. So I want you to just, I'll be patient and watch this session so they can get every point you need to get from this training this afternoon. All right, so I'll look at the USD CHF. Here we're going to be looking at how we can use the Fibonacci tool to set, target levels in a bearish market. Now, when the market is bearish, let me switch straight to USD CHF. Now, if you want to anticipate a bearish move in the market, like I can see on the screen, what we do with the Fibonacci tool is that we use the recent low and the recent high. We anticipate a bearish movement. We identify the recent low and the recent high. Now we drag our Fibonacci tool. For those who are just joining us, that's the Fibonacci tool update I just circled. I'll click on it. I'll right click and drag from the recent low to the recent high. The tip of the candles from the recent low to the recent high. Now, because we are looking for price to drop downwards. Now, price has actually dropped in this case, but then I'm showing you what could have led to that drop. Now, when you are using Fibonacci tool, you have already determined direction. You are only looking for potential target levels that price could get to. Please, let's understand that first. So like I said, in a bearish market, we're looking for the recent low and the recent high. And we drag our Fibonacci tool from the recent low to the recent high because we are looking for a bearish movement. Now, if it's a bullish market, the opposite is going to be the case. We're going to be dragging from the recent high to the recent low. We'll soon get there. Now, from my own experience as a trader, I discovered that it's better when you have, in a bearish market where the high is actually around a resistance level. It gives a higher level of probability. If the high is around a resistance level, I repeat, it gives a very good level of probability that price will actually drop in that bearish direction. So like in this example I'm showing us right now, we have a resistance and we can draw our Fibonacci tool from the recent low to the recent high. Depending on your trading strategy, for my strategy, I'll just use a trend line to look for a breakout. Now, I'm not really going core into strategy today. I'm only showing us how we can apply the Fibonacci to set our target levels. Now, You can see that along the line, there's actually an initial high here, coupled with this one becomes a resistance. And thirdly, price touched that level the third time, confirming a valid resistance. Very important. Now, the next thing we need to note is the Fibonacci levels. The Fibonacci levels. You can see there is Fibonacci level 0 up there. There's 23.6, there's 38.2, 50.0, 61.8, 78.6, and 100. Now, out of all these levels, all the levels are important, no doubt, very important. But then the most important levels on Fibonacci, they are actually the Fibonacci level 50 and 61.8. Why will I have said that those two levels are important? Because mathematically and over time it's been proven that those levels act as, now the Fibonacci 50 actually acts as a psychological level. Psychological level are all numbers, round numbers, when we trade in the financial market, especially Forex. Now, both Fibonacci 50 and 61.8, they are also regarded as retracement or reversal level, meaning that anytime price gets to one of those two levels, there will be a reaction in price. Reaction in the sense that price may get to 50 and retrace and continue further, or price may reverse backward altogether. The same thing Fibonacci 61.8, when price gets there, we may see a retracement and a continuation or a reversal altogether. These are two scenarios that could play out around these levels. So usually we use them as take profit levels because it's believed that when price gets there, it's either you can see a retracement or continuation. So rather, instead of getting through all the route of trying to manage it there, just set it as a take profit level so that when price gets to Fibonacci 50 in your favor, the trade automatically closes for you in profit. And if it gets to 61.8, it automatically closes for you in profit likewise. So this is just a simple way to use your Fibonacci tool to set take profit. For those who are just joining us, we started by identifying where to locate the Fibonacci tool on our MetaTrader 4 platform. And I just circled it up there. And I said, for you to look for a bearish movement, you drag a Fibonacci tool from the recent low to the recent high. And I said it's preferable if that high is a resistance. It gives a higher level of probability. And in the example you are seeing here, price actually did break out below the trend line. And if we were to take this as a trade, we will say that price hit the Fibonacci 50 take profit level, that will be TP1, and currently it's at TP2, which is Fibonacci 61.8. It's just as straightforward as that. Now, I'll show you another example for a bearish setup. I've showed USD CHF. I'll show you GBP NZD. All right, so this is GBP NZD on the 4-hour time frame. Again, we're looking for a bearish movement. Why? Because price hit a resistance on the 4-hour time frame. So to capture the profit potential of this instrument with our Fibonacci tool, we will drag our Fibonacci from the recent low. Now, this is the recent low. This is the recent high. And that recent high is a resistance. Like I said, it's better that way. So recent low, recent high, which is on the resistance. Then I'll pick my Fibonacci tool, drag from the recent low to the recent high. We were anticipating a breakout to the downside, and you can see price broke out. Again, price hits Fibonacci 50. And price hits, you can see. Now, see what happened here. Like I said, most of the time, there'll be a reaction when price hits Fibonacci 50 and 61.8. Now, look at this example here. Price hit Fibonacci 50, and there was a retracement back to 38.2 before there's now a continuation to Fibonacci 61.8. That means if two trades have been set up on this, when price hits Fibonacci 50, TP1 will automatically close. It's a TP2 that experienced retracement and eventually price still dropped to the Fibonacci 61.8, which is the take profit level for the TP2. Now the question is this: what if price continues, downwards, going to Fibonacci 78.6 and 100? Fine, it's possible, but then that's not our goal. Our goal is to catch reasonable profit levels. You see, in trading, you don't keep running after price. Have a reasonable price level. Don't be greedy. Take what is reasonable and be out of the market, because those other levels, 70.6 and 100, they are actually not guaranteed. They are not guaranteed. It's a 50-50. Price might get there or not get there. But there's a high chance that price will get to Fibonacci 50 and possibly 61.8. So you only look at what is possible, not what is not, really possible or guaranteed. So this is a second example on how to use the Fibonacci tool to set profit target for a bearish setup in the market. I'll show you a third one, and that will be the US oil. So if you have not been using Fibonacci before, after this class, I believe you will know how to use it. And for those who join my analysis every morning and I just, pull out the Fibonacci tool and show you profit targets, this is exactly how we do it. You see, at PU Prime here, we don't hide anything. We show you how we trade. We show you what we do practically. And so you're in safe hands. Just make sure you utilize all this, information to become a better trader. So third one is US oil. Now, I had the bearish analysis here of the US oil. You can see there's a resistance. Now, let me make it a little easier. Yeah, thank you, Mr. Dowda. I like that feedback from you. You said this broker is massive. Thank you for that feedback. So if you're on the platform this afternoon, you don't have an account, or you have a dormant account, an account that is not funded, and you're not trading, you're missing a lot. You're leaving a lot of money on the table. Don't forget, we're trading NFP live next Tuesday. Next Tuesday is the last NFP for the year 2025. If you have never joined us on live NFP trading before, you're missing. Christmas is around the corner. You can make the money for Christmas just in a matter of seconds as the data gets released by 2:30 p.m. next week, Tuesday. But then we're going live by 2:15 p.m. So please do join us. We'll drop the link early enough so that you can be a part of the class very, very early. So, all right, back to Fibonacci. This is the US oil on the 1 hour time frame. We identified price hit a resistance on the one. It's actually on the 4 hour, but then it still works for 1 hour. And we're looking for a bearish movement. So I'll drag my Fibonacci again for this case. Now, the recent low on the 1 hour time frame, which I'm looking at, is this region. So I'm still very much in line. So I drag my Fibonacci tool from the recent low to the recent high, and anticipating a breakout to the downside, which actually already happened. All these are past data that I'm showing us. So again, price broke out, hit Fibonacci 50, TP1 taken, Fibonacci 61.8. Yeah, in this instance, price continued to 78.6 to 100. But to be honest, we are not after that. We're good with hitting profit levels, Fibonacci 50 and Fibonacci 61.8. Now, a question arises: what if you want to use a Fibonacci tool to set pending orders? Very, very possible. And that's one of the powerful ways we can use this tool. How do you use Fibonacci tool to set pending orders? Usually, depending on where your price placement is, in most instances, you may use your Fibonacci 23.6 in this instance to set a sell stop order. You may wonder, how do we set pending order? Mostly we use the Fibonacci tool, though there are instances we really don't, but then it's a lot easier to use the Fibonacci tool. Once you've been able to identify your recent low, your recent high, and you've plotted your Fibonacci tool on the chart, your Fibonacci 23.6 may take me, get what I'm trying to say. I'm not saying it's going to work like that 100% of the time, but most times, depending on your price movement, Fibonacci 23.6 may as well serve as your entry. So let's say you have a sell stop order at Fibonacci 23.6 and you want to set your take profit one. Now, there's nothing stopping you from using 38.2 as a take profit level if you so wish. I mean, it's a choice. But then for me, if I want to set 3 take profit levels, then I will use 38.2, 50, and 61.8. But if I'm setting 2 take profit levels, it will be 50 and 61.8. So it's just by choice. There's no hard and fast rule about it. Just do as the occasion serves you by your own discretion. So if you set your sell stop at 23.6, you can set your TP1 at 38.2, TP2 at 50, and TP3 at 61.8. It's just so easy and straightforward. Most important thing is get your direction correctly and use the tool to set the profit taking levels. All right, AA is asking a question. Well done, sir. I can see that you dragged the fib from the low from 3rd December. Isn't that too far off for today? Can I drag it from a closer date range? It's not about the dates. It's about the low. Low is low. Low is not about today. It's about the recent low on the chart. It can be any day. It can be yesterday. It can be last week. I'm on 1 hour chart. That is the recent one I can see. So there is no hard and fast rule that it's far away. Let me confirm the date you mentioned. It's even second. Yeah, that's the recent low. It doesn't matter. This is 1 hour chart. So it's still very valid. All right, so I've showed you 3 examples of how we can use the Fibonacci tool in a bearish direction. Now I'll take you through how to use it for a bullish trade setup. And I have 3 examples also. I'll be using the Euro card, the Euro USD, and gold. All right, so let's start with the Euro card. All right, so this is Euro card on 1 hour time frame. Now, for a bullish setup, we're going to be dragging our Fibonacci tool from the recent high to the recent low because we're looking at price breaking to the upside. Again, this is past data. So again, the low, it's better off as a support because price needs a support from where it will bounce to a bullish direction. So I'll drag the Fibonacci tool again. I circled it up there. That's Fibonacci tool up there. I'll drag from recent high to the recent low. Depending on your strategy, for me, I will just use a trend line anticipating price breaking out above the trend line. Now you can see here that when price hit Fibonacci 50, which is at this point, sorry, I didn't do that too well. This is Fibonacci 50 confirmed here, which could have been our TP1. Price entered the range. There was a range till price dragged itself to Fibonacci 61.8. And from 61.8, there was a reversal in price. That's I tell you that anything can happen around these 2 levels. There can either be a retracement or a reversal. Or, well, do we call it reversal or a major retracement because price dropped sharply? Eventually, it actually went up, but then many people will have been emotional at this point and probably will have exited. But at least, even if it was a live trade, at this 61.8 precisely, your TP2 will have been hit and you are out of the market. It's just it's just showing us that truly, like I said, price will react at these 2 levels, either as a retracement or as a reversal. All right, Zone, you can send me a chat on WhatsApp. All right, so that's Eurocard. I have 2 other examples. Euro USD. Okay, so this is Euro USD on 1 hour time frame. Now, this is our recent low. This is our recent high. We're looking at price breaking to the upside. So we drag our Fibonacci tool from the recent high to the recent low. Please, I'll attend to all questions. If you have a question, you can just drop. Let me run through. I'll attend to all the questions. All right, so we've dragged our Fibonacci tool from the recent high to the recent low, and we can see that there was a breakout, a retest, a continuation to Fibonacci 50, a retracement again, a high, a retracement. When price hit Fibonacci, okay, sorry, I already omitted Fibonacci 50. Let me do it again. A breakout, a retest, a hit on Fibonacci 50. Yeah, this is Fibonacci 50. And there was a retracement instantly back to 38.2. Price broke above 50, retraced again, and went high to 61.8, which should be our exit. After 61.8, there was a major retracement back to 38.2 before a breakout, and on like that. Now, all these are evidence of the fact that reaction will happen around 50 and 61.8. Once you get to those levels, don't be greedy, exit the trade, and you're out. Like in this case now, if this was a live trade with entry around 23.6 in this case, profit will have been 40 pips to Fibonacci 50 and about 60 pips to Fibonacci 1.8. That is 100 pips. That's good enough. If it's on 0.1 lot, that is $100. If it is on 0.01, that is $10. That is good enough. Be out of the trade. You don't need to wait till it eventually got to this level. You see all the movement in between. Don't give yourself, don't get agitated unnecessarily over the market. All right, so that's Euro USD. And finally, like I said, I'll show you gold. So we're looking for a bullish setup, recent high, recent low. We're looking for an upside movement. So we also identify our support. So we drag our Fibonacci tool from the recent high to the recent low. Price broke out to the upside. Price hit Fibonacci 50. And you can see there has been retracement, ranging downwards. It has not even gone up to 61.8. So that means in this case, your TP1 is hit, TP2 is still pending, it's still hanging. All right, so those are the examples. Now I'll show us live examples from trade analyzed today. So if you are part of the analysis in the morning today, you will attest to this. So this morning I analyzed CAD CHF. I think I started the analysis yesterday, and it still spilled over till today. All right, so if you remember, I said CAD CHF, I was bearish on it on the daily time frame down to 1 hour. Now, this is the recent low. The recent high is already at a resistance. Then we drag. Now, if you remember the analysis, I said once price breaks out below the neckline region, you can enter a sell. So if you have to use Fibonacci 2, price already hit Fibonacci 38.2 at about 15 pips. It's proceeding to Fibonacci 50 as we speak. And if the volatility is much, it may get to Fibonacci 61.8 at 43 pips. So this setup is going exactly along with the expectation. The same thing, AUD-CHF analyzed a bearish breakout on the AUD-CHF on the 1 hour. All right. So for AEDCHF, if you remember the analysis, you can go back and check the video this morning. On the daily time frame, I said price hit a resistance. We have a resistance on the daily. And on the 1 hour, we anticipated a breakout with a trend line. And my recent low in this case will be here and drag to the upper part. Price already broke out and price is already testing Fibonacci 38.2. That's a potential of some 15, 16 pips from where price may proceed to Fibonacci 50 at about 29 to 30 pips. And if the volatility is so much, it may proceed to 61.8 at about 40 pips thereabouts. So both CAT CHF and AED CHF from today's analysis is going exactly according to plan. And the Fibonacci tool can help us capture the projected profit levels on these two instruments. And the third is GBP AUD, which I also analyzed this morning as a bullish setup. All right, so this is the GBP AUD. If you join us in the morning analysis, I said price hit a support, a resistance turn support on the daily time frame. And technically, we're looking for a breakout to the upside. And on the 1 hour, I'm seeing a falling wedge. And I remember telling us I was seeing an inverse head and shoulder. And price has broken out. If you put Fibonacci tool to this, oh, sorry, I was too fast with that. Again, this is a recent high and this is the recent low on the support level. So technically, we're looking out for price breaking out to the upside. And I will drag our Fibonacci tool from the recent high to the recent low. Now, see what is happening here now. Now, one of the ways we can use Fibonacci is also to identify, they can also serve as support and resistance levels. Apart from being psychological, retracement, or reversal, it can also be used to identify support and resistance. Now, see what is happening to GBP AUD here. Price actually broke out as analyzed, but the current 1 hour candle is looking exactly like a rejection candle. Now, the next 1 hour will be by 5 p.m. Time is 4:33 p.m. Now, if by 5 p.m. this candle maintains this current structure, then if we have not entered the trade, we stay out because it means that Fibonacci level 38.2 is acting as a resistance. So this can help you to filter your trade. So if you have a rejection candle at a resistance level, you know that there's a possibility price may come to the downside. So that can give us more, can help us analyze the market better to have a higher probability, trade. Now, that doesn't mean we're going to sell completely out of that trade. We just know that it's not yet time to trigger a trade. So we might have to wait for price to either retrace back, to 23.6 and now break out above 38.2 before we enter any trade. So this is one of the good ways to use the Fibonacci tool to identify retracement, reversal, psychological level, or even support and resistance. But all things being equal, even though there might be a retracement, over time we expect price to still break out to the upside and still find its way to 50 and possibly 61.8. All right, that'll be all from this webinar this afternoon. If you're just joining us, we've been looking at the practical approach on how to use the Fibonacci tool. I showed us how we can identify the Fibonacci tool on our MetaTrader platform, especially the MetaTrader 4, how to apply it on our chart after discovering the recent high or low, how to use it in a bearish market, in a bullish market, and the major uses, how to use it to take profit level, how to identify retracements, reversals, psychological, and even resistance and support level with this tool. So that's going to be all. If you have a question, you can go ahead and drop it in the comment section. I'm attending to questions now. So, okay, pardon me if I can't pronounce this too correctly. Akidre FX. I hope I'm correct. Please, what is the correct setting for the Fibonacci tool? Just use the default setting. Use the default setting. It's perfect for you to start. Mr. Dauda, is it our entry time frame alone we can use the Fibonacci. It's the easiest way to use it, except you want to use advanced Fibonacci strategy where you go to the higher time frame with your Fib tool and come down and check confluence. That can be complicated if you are not yet an advanced trader. So if you're a beginner, intermediate, yes, just use it on your entry time frame alone. How to set sell pending order. I just mentioned it. Some of these things, they're actually by discretion. Now look at the current setup I have here. As at the time I did the analysis this morning for this GBP AUD, price was somewhere around there. So I might as well use Fibonacci 23.6 as my pending order, my buy stop pending order. That means price will have been triggered into a buy when it hit this level. But please, before you start using pending order, do your analysis well. Please listen carefully to me. You must analyze very, very well, and you know that there's a high chance price will go in that direction. Otherwise, your trade may get triggered and it may still turn around and be a loss. So the key is a strong analysis, not just setting pending order randomly. You know, random setups is not going to give you any good result. You must do your analysis very well. Now, if this analysis was correct, because you can see price hit Fibonacci 23.6, which is the entry, could have put a buy stop at 23.6, and price hit 38.2 fib. That's a profit already about 33 pips. Because like I said, in the morning, price was not there. Price was here. But I knew the setup I saw right from the daily down to 1 hour with a chart pattern to confirm it. So the goal here is to do proper high probability analysis. Then you can use the Fibonacci tool. Like I said, most of the time, your 23.6 may just be good for your entry if you have done your analysis very, very correctly. So I believe that point is well taken by Mr. Dauda. All right, zone two, zone two. So at this point, when we see trade at a zone, we take it immediately with the FIB. I never said that, sir. That's the place of patience. All the setup I gave for you, they are past data, and I showed you the current one that took place today. Some of those, in fact, not even some, all the three examples that are live, the analysis was done 7 a.m. this morning, and some of them triggered probably around 12. So it's not instant. See, patience is a virtue in trading. Patience is virtue. It's a very good virtue in trading. You need to wait for the actual breakout. But if you cannot wait for the actual breakout, then you may want to do a pending order. But you can't just use analyze now, use FIB now, and enter now. No, it doesn't work that way. Except you want to use a pending order. Yes, you can use a pen. But if it comes to instant execution, you need to wait for the right timing. If you must do it manually, otherwise, just set a pending order. All right, Oladele Esther, we need the recorded version of this exactly. Don't worry, you're going to get that. You get the recorded version. Genga Fadero, Mr. Genga Fadero, I came late. I hope the lesson is recorded. Yes, it's recorded, and the recorded version will be posted on the groups very shortly. Okay, I think I've attended to all the questions. Please watch the recorded version as many times as possible. And most importantly, make sure you practice what I've showed you. Practice it first on demo, very important, before you go live with it. But I strongly believe if you get this training this afternoon correctly, your trading will definitely improve. All right, I'll be signing out here. Don't forget again, NFP live trading session comes up next Tuesday by 2:15 p.m. This event is for funded clients. If you have funds already, go and top up. We're going to be making money for Christmas next Tuesday, 2:15 p.m. Get funded and join us live. All right, take care and bye-bye for now. Bye.